An independent audit and report of compliance with accounting standards, state and federal laws, and grant program requirements was completed for Jackson County. This audit and report was conducted by Moss Adams LLP that recently presented the findings to the Jackson County Board of Commissioners, administration, and the public. Let's look at the findings.
So our responsibilities as your auditors is to issue an opinion on your financial statements. So when we're just looking at the accounting and are these financial statements, were we able to get comfortable that they're, that there's reasonable assurance that they're materially correct? We were able to get there. We issued an unmodified or clean opinion on these financial statements. So that is quite the accomplishment on something that's this large. As I mentioned, we have the Oregon minimum audit standards, so we issue a report over that as well. And if we identify any instances of non-compliance, we would communicate those to you. But we were able to issue our report and found that the county was in compliance. And then the single audit. So this is the audit that's under the uniform guidance. And this is when we are looking at your federal awards. So we issue a separate report specifically for that. And if there were any items that we were found out of compliance, we would have to communicate those to you well. And as noted on the screen, the county was found in compliance for that as well. And lastly is the yellow book, or the additional reports that we need to issue because this audit is an audit under governmental auditing standards. So we issue a report on internal control and compliance with laws and regulations, and we don't have anything to report there either. The county was found in compliance.
And so the first series of slides here are looking at that full accrual. These are probably the most difficult to understand and to get some meaning out of. So a couple benchmarks here that might help you get a sense of how you're doing overall. This is just a slide that looks at your major revenue streams and trends over the last several years, and you'll see a pretty nice trend there, some increasing revenues. But also in here of interest is where you're getting those increase in revenues. Obviously there's a lot of sensitivity over property taxes. That's the one revenue stream where you've had probably the least amount of increase. Where you've really seen growth is in the grants. So you've had a very nice increase there, and it's nice to see that because that's money coming into the county that probably didn't originate from within the county. Also, charges for services, a very positive trend there because you haven't had growth in property taxes. You've had to find other ways to cover the cost of services. You've done very well there. So a very positive trend line on the revenues, and really without increasing property taxes. So that's a good trend. On the expense side, these are the major service lines, or again, this is very high level, but a couple interesting things there. First of all, the total expenses, you'll see you were holding the line, actually dropped overall expenses in 2015. Pretty big increase in 2016. The main driver of that is actually an expense you had to book for which you didn't cut a check for. It's related to your involvement with Oregon PERS. That was about $32 million hit on your expenses.
I do want to point out that while our financial statements reflect the booking of the PERS liability, it's not a new liability. It's a liability we've had all along. It's just the first year we're required to report it. So we have a biennium of increases of about 4% or $3.6 million a biennium coming 3 times. So we're going to have many millions of dollars in additional expenses in PERS, which we are prepared to implement, covering the cost of by having reserve and operating reserve in our operating budget without the need to necessarily make reductions. So many local governments went out and borrowed money, believing that they could beat the rate of increase in PERS costs. We actually took a cash fund balance of $9 million and reduced our PERS costs approximately $20 million over 20 years. The things that are in our control, the ability to try to be prepared to cover the cost and then to try to minimize the cost as much as possible, I think we've been very creative and successful in doing. Even though it hasn't brought our rates down largely, it is a lesser rate than we would have had and lesser rates than most governments have. What happened to a lot of local governments when they went out and borrowed the money is they got locked into a rate that became more expensive than they would have paid staying in PERS without bonding the debt. So we're not in that situation because we made a cash payment in a side account. What a side account allows you to do is essentially earn at the higher rate, not the employer rate, and offset your unfunded actuarial liability over time. So that's the short version of what it does.
Yeah. By not using debt to fund that side account was really smart. You don't have that risk. And there are very few governments that chose to do it with cash. So that was a pretty smart move. So actually, you've done some smart things that you can within your level of control, which is to perhaps hang on to some cash so that when those increase in contributions come, you have those resources to make those additional payments. But what's interesting here is that your general government has held the line. Where you see increase in spending is, community services and safety. So the sheriff's department, you've put your resources there. Also health and human services. So this slide, this is really a good benchmark to look at. This is your net position. So basically that first blue bar, if you were to sell off all of the county's assets at book value and liquidate all of the debts at book value, this is what would be left over. And what you want to see is at least that trend holding steady. That orange bar or red bar, that represents the portion of your resources that are capital assets in nature. Those are the roads, bridges, the buildings, the equipment, less the debt that you use to acquire those. And you'll see a positive trend there. That trend line for a lot of our government clients is actually declining because of budgetary constraints, right? It's easy to put off spending for roads and bridges and replacement of the assets that you own when you have budgetary constraints. So overall, this is showing stability. It's showing some growth in your capital assets and obviously doing a good job of maintaining what you have here. So that's kind of the full accrual basis. If we look at now more that modified or, there's a lot of emphasis on the general fund because that's more within your level of control. These are the services that you provide that aren't dictated necessarily by others. And you've actually brought in more revenue than you've incurred in expenditures pretty much every year in there. Another benchmark to look at is just cash. How are we doing with our cash and investments, and what does that balance look like? And your cash position is kind of held steady, a little bit of an improvement the last couple of years, up to $150 million. And then this is just the general fund. What is the cash and investments held in your general fund? And again, you've seen a nice positive trend line. One of the ways that you evaluate, how much cash should I have or what's prudent, is to look at how many days you could operate. And you'll see that you've been between 331 and then a slight dip this last year to 293 days. To me, it's not a matter of accumulating. You want to have a safe margin and you want to be able to cover risks. And you want to hold money aside for future replacements of some of your capital assets. It's not an extravagant position, but it's certainly a healthy position. This is an interesting stat as well. What some of your brethren are doing out there to deal with their budget constraints is they're just incurring more debt. And what you're doing here is paying that down. So you've got a very positive trend. You've been able to make investments in your capital assets, but you're doing it without incurring a lot of debt along the way, which is unusual and actually favorable. Now, one thing that's real fascinating to me is your property tax rate. So what's amazing to me is that you've been able to do or maintain your financial position here with one of the lowest property tax rates. When you look at the counties in the northern part of the state that aren't so dependent or really didn't have timber revenues, their rates are over $3. Some county, I think Multnomah is over $4 per thousand, almost double your rate. So you've done really well with a pretty low property tax rate here in the county. One of the things that we like to do is, where are you putting your resources? On the expense side, a couple things pop out to me. One is the general government. The other timber counties down here that you're comparing yourself against spend almost 14% of their expenses on just general government services. You're under 8. Also, just looking at the community, justice, safety, you're putting 36% of your resources into that. When you look at the larger counties up in the northern part of the state, they're only putting about 25% of their resources toward community justice and safety, sheriff services. So you're putting more of your resources to safety, but you're doing it fairly frugally. You're doing amazingly well in stewardship of the resources that you have available to you. And so hats off to for your leadership and the leadership of your management team here.
I just want to say it's almost ho-hum. It's another clean, unmodified occasion. And we're still in great financial shape, but that's anything but routine, and that really is the result of just daily diligence, financial management acumen of our finance staff, our county administrator in conjunction with the board and the budget committee. But when you look at our position in comparison to other counties throughout the country, it really is no secret and it's no mystery why we are in the position that we're in, and I just want to make sure that their efforts are applauded and appreciated, because it really does mean something very significant to our county.
And I just piggyback on that too. Thank you for the great presentation. As always, we appreciate hearing how our county's doing. And I think I told you, I said it always makes us look good, but it truly is the hard work of our administration and the departments that are involved in this. And Eric Spivak's here from Audit, and we thank you for coming, and everything that goes into the work that you present to us that's done on the county side, and the strategies and the investments that have been thought out years ahead that are just, they can be pitfalls, but they've worked really well for our county, and the frugal financial work that's been done is just a credit to the staff of our county.